Hey everyone, I got another infographic for you. This one is less niche, thankfully, than the previous one. I'm comparing 4 different gold projects in Canada and just trying to kind of suss out valuation between them, kind of peer comparison style, but then also maybe trying to show the line of sight towards valuation re-ratings that can occur as projects successfully advance towards production. My goal here, and this actually kind of ended up mirroring my due diligence process in a lot of ways. When you're trying to draw peer comparisons and you're trying to, so as to identify valuation inefficiencies, you need to standardize things. You need to harmonize all the variables, right? When you read technical reports and you flip to the back, section 22 or whatever, and see the sensitivity charts and the different impacts and different variables that impact IRR and NPV, et cetera, et cetera. Base cases are not ever really the same, right? There's a whole bunch of different variables that go into them. And so you really do kind of have to synchronize those things to allow for really kind of a one-to-one comparison. And so that was a large part of my goal for this. I know there are imperfections or reasons why these comparisons might not yet be one-to-one. I've got some high grade mixed with low grade. There's tier 1 and tier 2 projects. I'm comparing a producer to devcos using the same valuation methods. And so, yeah, just know that this project is not some sort of authoritative thing, but rather that it's meant to be a bit of a signpost, sort of an approach to methodology to help you see how I do peer comparisons, and also to help people, and potential investors or investors in these companies see the actual quite considerable growth pathway that are in front of them. You're right. So Canadian Devco peer comparison, here it is. I just tried to make this as, I find to say because it's such a large thing, but I try to make it just as clear and directly, easily comparable as I could, right? I'm trying to minimize all variables to allow for the closest apple to apple comparisons there are. There you see the deposit rundown. You can see, of course, the outliers here are scale with Artemis in terms of tonnage and in terms of size of the resource, and then also grade for Skeena. And I guess grade for Artemis as well, right? You have bulk tonnage in Artemis, and then you have one of the highest grade open pits in Skeena, and so they are sort of mirror opposites of each other. But again, that's not necessarily an issue here, especially with gold prices where they are. Costs. This is where, look at the AISC of Skeena, right? That's what you get for high grade open pit, is, one of the cheapest mines out there. But then even Thesis and Probe, that's a good solid AISC, right? If you can get $1,000 US, that's not, top percentile, top decile, but that's competitive. When you've got spot price just rapidly roaring away from anything close to inflation, those numbers become more and more enticing. Down to valuations here, though, look at post-tax NPV5 and after-tax IRR. I gave you 2 different values. I gave you 2,000, which I thought would be the new base case, right? I'll get to this later, but look at the initial CapEx of Thesis, Probe, Skeena, 600 million, 600 million, 700 million, and you go down to NPV at 2,000, they're already 2-to-1. And so you should be starting to think that there's some serious valuation discounts to be had here. But here we are, 3,600 gold. This is the time. This is bonkers bonanza, making money hand over fist time for gold producers. This is maybe a larger thrust that I'll get into later, but that these sort of mid-stage devcos like Probe or Thesis are being seriously discounted, right? I think we'll look and see how Artemis, you can say, is kind of has captured fair value. It's making money hand over fist. You could argue maybe it deserves more reprieve than it has even, but I think it's, getting pretty close to fair value here. But that those mid-stage devcos look like they could be the next domino to fall, if you ask me. If we're talking about, what's the next stage of this bull run, I honestly think Thesis is a perfect example of the kind of company that's going to catch some love. They're a few years out from production, so they're not immediate. I think that if you even look at the comparison to Skeena, which is only a couple of years from production, and it already has a higher valuation multiple. It's those companies like Thesis or Probe where, heck, they don't need $3,600 gold to be extremely compelling economically. But the longer we stay here and the higher we go, the more that we should be giving them credit for those prices, and it's not. And I think you're starting to see the market maybe tune to that. And so if you want to act fast, if you got dollars and you're looking to put them somewhere, I would be looking at mid-stage devcos. And so PNAV though, and this is where, so again, I want to emphasize, these stages of, as I have them, are meant to be fairly general guidelines, right? We can all think of 100 different exceptions to these. But you should nevertheless see sort of this growth over time as companies, as risks and variables are minimized and brought to heel, and valuations are more concrete. I think the variability of a PEA is 30, 40, 50%, whereas the variability of a feasibility study is 10%, right? And so that de-risking produces increased value, obviously. But even though I'm saying these are just general guidelines, and you can think of a lot of different exceptions to all the different rules, look at these valuation gaps. Thesis is being valued at like $2,000 gold right now, and it's had a 20% run since I started this. I'm not fixing it. I've come too far, right? But even then, Thesis is fairly valued for $2,000 gold for a PEA. Thesis has its PFS coming out Q1 if they've added ounces, if they manage to increase confidence and without increasing cost, and if they manage to have any success with further discovery, there's no reason why that the value proposition will only increase from here over the next 3 or 6 months through Thesis. Then roll in the fact that that's just undervalued to begin with. I mean, look at this, 3,000 gold. I mean, that's a 5 or a 6 bagger between now and PFS if Thesis were to achieve fair peer value for where, quote unquote, should be as a PFS for a compelling competitive project with strong economics in a tier 1 jurisdiction. There aren't a lot of reasons for it to get heavily discounted. And so, they're a client. I've been covering them for a long time. If you follow me, you know that. I'm almost pounding the table harder now than I ever have been, because there's the disconnect to me is so silly at these gold price ranges. So there's my thesis pump. And so I think, let that sink in, right? The economics of these gold mines, I think we have a little bit of a whip dog syndrome right now, where we're scared to believe or scared to maybe act on what valuations should be, right? And I mean, I don't blame you. It's been a hard 4 or 5 years in this sector, right? Ever since kind of the end of the COVID free money. But look at the numbers. I mean, look at where we are now, right? I mean, there's a reason why the bulls are running in this sector. The gold prices are out of control, and the knockdown effect of the valuation and the valuations for these companies, it's wild. I mean, you have companies trading at spot at 86% IRR, right? That's wild. Same thing down here, right? I mean, this NPV5 to initial capex ratio, right? That's kind of the classic one. You want at least 1-to-1, kind of a 2-to-1 kind of thing is maybe closer to your benchmark. But at what spot price? And again, this is where I wanted to have these sort of 1-to-1 opportunities to really suss out the impact of spot price on these valuation metrics, right? I mean, look at this. Look at the NPV5 to initial capex ratio at 3,000 gold. Gold has been up high and sustained for a long time here. And I think that sort of reality is slowly melting into the market, and people are starting to understand that all of a sudden, all these gold projects that when you have the right macro setting, these companies become absolute cash cows, as we're seeing with Artemis right now. That when you have these sort of valuation multiples, right, this sort of NPV, that sort of IRR, this initial capex, I mean, the free cash flow that Artemis is running through right now must be pretty intense. I'll try to find that here for the video. But the point is that blue sky is created through macro conditions, through gold price, spot price. And so here we are, right? This is happening. That what was already a strong, 1 or 2-to-1 ratio of NPV to spot, suddenly now it's 2, 5, 8. I mean, we're approaching 8-to-1 NPV to capex, initial capex for Thesis, 9-to-1 for Skeena. The point is that there's an incredible amount of value being unlocked by these rising spot prices for projects that have not risen in cost anywhere close to the same level. EV ounce to peers, as you can see here, right? Again, there's these discounts. Even Skeena, I thought that was surprising. Even Skeena is trading at a discount. It could actually just reasonably go up even more. And I'll end here. Maybe the key thing, and maybe kind of what this all boils down to, you say, so what? Cool. Thanks for the evaluations, right? But what I wanted to actually end on, I guess, was, just take a look at, and I want to emphasize again that this isn't meant to be that these will happen. This is saying that if they succeed in their path of production without huge cost overruns, if gold stays up, blah, 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 right? This is what they could see happen to them. Look at those numbers. It speaks for itself, right? Thesis could double and still just be considered peer average on an EV per ounce, right? It could 6x in the next 6 months and just be considered fairly valued for a PFS project. It could 8x, right after PFS, give it 2 years. It could 8x in the 2 years it takes to get the feasibility study out. And ultimately, 5-6 years from now, if and when Thesis and the Lawyers Ranch project ends up in production again, that's a 10-bagger, and not an unrealistic 10-bagger. If it's going to trade at a full P now, right? If it's going to trade at a full fair value, that's a 10-bagger from here. So yeah, I think that's it. I'm going to call it there. Maybe if I have more ideas, I'll come back and add to this. But I just think that really that this project really stands out to me and really taught me how much I think devcos like Thesis or Pro remain actually undervalued in today's market. And I think that is a weakness or an inefficiency, or the next domino to fall, whatever you want to call it. But I think that odds are good that devcos like Thesis and Probe are going to catch a lot of love here if gold stays high and the wheels stay on the market. Yeah, that's it. Hope you like it. As always, give me some feedback. If you have any ideas for another infographic or more pure comparisons, maybe I should be doing copper next. Let me know. I'll see if I can whip one up. But yeah, hope you enjoyed it. If the gold bulls keep running, I really like the odds for these mid-stage devcos to catch some love here in the next short order. That's it. Thanks for listening, and I'll talk to you soon.